All right, what is up, tycoons? What is up, traders? Super excited for today's video. Going to give you all a quick update on TLT, as well as really just give you a nice recap of everything that happened in February. Okay, March has officially started, and so we can take a look at February and go over some of the key things that really happened. So I've got a nice presentation, some good charts in there for you guys. Make sure to smash that like button, subscribe to the channel if you guys are new. We'll go ahead and jump straight into it now. So what we're going to do is we're going to come over here and take a look at our presentation we have for you guys today. So this was TLT's daily chart yesterday. Okay. And so, in the Discord, we're posting analysis all the time on all of the ticker symbols, the different tickers that we're looking at. And TLT actually had a really nice setup yesterday. Now, what's amazing is that TNX also had the same setup. So if you're not familiar, we're looking at the abandoned baby candlestick pattern, okay? And so TLT had a bullish abandoned baby candlestick pattern, right? So, you're looking at for this candle right here, that was it right here on TLT on the daily chart. And then TNX, all right, is going to basically almost be the inverse of TLT, right? So when you're seeing the treasury yields rise, you're going to see the bonds and the prices of the bonds go down, right? So if TNX is going up, TLT is going to be down. If TLT is down, TNX is going to be up. That's generally speaking, right? Just a general statement. Okay, what we had yesterday was a very nice setup with a good risk to reward ratio. We had bullish divergence on TLT. So I have some circles here, right? We have a low and then we have a lower low. Okay, but if you look at your relative strength index, we actually had a low and a higher low. So we had about two patterns forming together, two indicators of some possible bullish activity, right? Number one being that bullish divergence. And then number two, we had the bullish abandoned baby. And if we want to even count a third one, right, we had the bearish abandoned baby over here on TNX. Now, if you take a look, this is today's chart, okay? And we can see that TLT gapped up, right? Up amazing today, and TNX gapped down, right? So the patterns played out perfectly, guys, and we were able to capitalize on this in the Discord. We had the bullish divergence, we had the bullish abandoned baby combined with the bearish abandoned baby. You can see that they played out perfectly according to the chart pattern. Okay, and this is the play that we got in yesterday. Okay, so right around 2 p.m., we started noticing that, hey, we're starting to see this abandoned baby candlestick pattern forming. And if we get into this trade, we could see some really nice profits tomorrow, right? Meaning today. And of course, we did. You can see right around open, it took profit on some of that position. And then shortly afterwards, went ahead and closed the position at 180 per contract. We got into those at 104 a contract. That's almost an 80% gain overnight. Very nice profits in the Discord. If you guys want to join, be a part of the community, all you have to do is use the link in the description below and use code Zackley for a discount. All right. Now, we're going to go ahead and move on from that. And we're going to start off over here taking a look at some of the treasury rates, okay? And so this is a chart of the treasury rates. We can see the 1 month is up is at 4.65. We have the 1 year at 5.02, 20 year at 4.10. But what I want to show you guys is just, the year. This is basically the past year, okay? March of February of 2022 to February of 2023, we can see that the treasury rates have increased at a very dramatic pace. And that's part of the reason why TLT has been hurting so much, right? And has been in this big downtrend for the past year. Okay, if you take a look here, these are some of the global bond yields, right? And we have Italy on here, we have Spain, we have the US 10-year treasury, we have Canada, Germany, Japan, and we can see through the past year as well that, global rates are up as well. It's not just in the US. Now, here's our market summary. The NASDAQ dipped about 1% in February. The S&P fell about 2.4%. And the Dow Jones sank about 3.9%. And this is following the conclusion of Q4 2022 earnings season. February was a second straight month in which the NASDAQ outperformed all the other U.S. indices, right? And the small cap Russell 2000 fell about 1.7%, also outperforming the large cap S&P 500 and blue chip Dow Jones indices for the second month in a row. Tech was the only positive sector in February, rising about 0.4%. Energy was at the bottom of the pack with a 6.9% decline as oil prices fell in February. Utilities had the second worst performance in February, falling 5.9%, as many utility stocks, often regarded as bond substitutes, face growing competition from U.S. Treasury yields. And U.S. Treasury yields eclipsed 5% for the first time since July of 2007. Rates on the 6-month and 1-year Treasury bills at the end of February were 5.17% and 5.02%, respectively. The 10-year rate was the lowest on the yield curve for the second straight month, but its 3.92% yield as of February's end represents an 11.4% month-over-month increase. Now, U.S. unemployment fell to its lowest level in over 50 years, and labor force participation increased month over month. Inflation came in about flat at 6.41%, while CPI and personal spending logged their highest monthly advances in several months. The U.S. ISM manufacturing PMI also buckled 8 straight monthly declines in February. Lastly, the housing market continued its cool down as month-over-month U.S. existing home sales fell for the 12th straight month, and U.S. median existing home prices dipped another 2%. Now, I recently did a video on Warren Buffett, okay, and this is the thumbnail to it. If you just want to type in exactly trades Warren Buffett, go over some 4 simple lessons that you guys can learn from Warren Buffett. But I have an amazing stat right here, okay? In this chart, this actually represents essentially, if you were to make monthly investments of $100, right, starting in March of 1980 through February of 2023, if you invested that in the S&P 500, it'd be about $265,000 today. That's what this orange line is right here. Now, if you would have invested it, okay, the total cash contributions, which is about $51,600, would be nearly worth $6 million. Okay, so it's no wonder why Buffett is called the Oracle of Omaha. Okay, massively outperforming the market over the past 40 years. That 50 grand would have been 265,000, again, invested in the S&P. But if you would have invested that in Berkshire, okay, BRK.A, that'd be worth almost $6 million, guys. Life-changing money. I mean, just absolutely ridiculous. And, this is just from monthly investments, right? Not even every single week. So, just take that in mind. There's a reason why he's so famous. And, you can learn some things from him, which is why I made a video on it here recently. All right. If we take a look at the major index returns, okay, that's what this chart is here for February. We kind of briefly touched on it earlier. The Nasdaq was down about 1%. The Russell 2000 down about 1.69. All right, we also have some emerging markets on here. We can see that underperformed all of them, down about 6.48%. And, we have some nice graphs right here, or a nice little table actually for you guys. And you can take a look at the year total returns, the 6-month, 3-month, and 1 month. We'll go over here, and this is kind of just showing growth versus value, which is something that I've shown previously a lot in my videos. I typically like to look at SPY-G/SPY-V, and you can use that as a good comparison to see really when growth is outperforming value and when value is outperforming growth. But large cap value stocks represented by IWD, they had the worst February among the 4 equity styles, falling about 3.5%. Growth stocks, both small cap, which is IWO, and large cap IWF, they slipped about 1.2% in February, while small cap value ended the month off by 2.3%. If we go over here, this is going to be the different sectors in the market, right? So we have tech, industrials, consumer discretionaries, all of those. And we can see that tech, we mentioned earlier, was the only positive one, up about 0.4%. Industrials down 0.9%. Consumer discretionaries down 2.1%. Financials and consumer staples both down 2.3%. Communication down 2.9%. Materials negative 3.3%. Healthcare negative 4.6%. Real estate negative 5.9%, utilities negative 5.9% as well. And we also talked about energy being the least performing out of all of them, negative 6.9%. Now, these were the top 10 S&P 500 performers of February 2023. So, maybe you want to take a look at these, and maybe some of that performance could lean over and spill over into March, or perhaps even the rest of the year. We have, CTLT in here, Catalent. We have West Pharmaceutical Services, WST. We have NVIDIA, Tesla, Meta. We actually just had plays in the Discord on all three of these. Okay, we had Meta, we had NVIDIA, and Tesla calls that we did pretty good on in the Discord. If you take a look here as well, we have Align Technology, ANSS, we have Fortinet, FTNT, Monolithic Power Systems, and WW Granger, ticker symbol GWW. Right, and you can see what sectors that these were in. Many of them were either in healthcare or technology, right? And so we took a look at the sector performance and saw how the sectors were performing, and healthcare and technology definitely held up a little bit. Now, these are going to be the 10 worst performers of February 2023. We have Lumen Technology, ticker symbol LUMN. We have Match Group, MTCH, Moderna, mRNA. We have Dish Network. Okay, we have WestRock, VF Corp, Organon & Co., Akamai Technologies, Newmont, International Flavors and Fragrances. So, maybe some of those are something that you want to avoid. Or potentially, these stocks are down a pretty significant amount. Maybe these are some things that you want to look into that could be oversold and could be potentially a good value in the long term, right? I know a lot of people tend to, and not just retail traders, but also institutions, hedge funds. A lot of them like to trade around momentum, and they'll buy into what's going up and they'll sell into what's going down. So, that's kind of why I'm showing you guys this today. Now, all of these charts are from Y Charts. It's a really cool platform. I actually tried to get them to sponsor me, but they said no. So, maybe email Y Charts and tell them to sponsor Exactly Trade, so that way I can get you guys a discount code to use Y Charts. It's a really nice platform, but it is kind of pricey versus some of the free platforms out there that's available, like TradingView. Now, we're going to go over some of the economic data. We, kind of touched on it earlier, but January's unemployment rate fell 3.4%, or fell to 3.4%, making the lowest unemployment level since May of 1969. The labor force participation rate went up 0.1 percentage point to 62.4, though labor force participation is still a full percentage below its February 2020 high. 517,000 jobs were added in the first month of 2023, far surpassing January non-farm payroll expectations of 187,000. Now, when that report came out, it definitely sent a shock into the market. If we look at inflation, year over year, U.S. inflation was about flat between December and January, coming in at 6.41%. Year over year, U.S. core inflation decreased 0.1 of a percentage point to 5.58%. The U.S. CPI rose 0.5% month over month, making the largest monthly increase since last June. At the same time, month over month, U.S. personal spending surged 1.76%, the highest monthly increase in nearly 2 years. The upper limit target federal funds rate remains at 4.75% as of the Fed's February 1st meeting, with the next Fed funds rate decision scheduled for March 2022. All right. Now, when it comes to commodities, after gold's strong start, a 6% gain in January, its price per ounce declined by 5.9% to 1,811 as of February 24th. Oil prices were also down in February. The price of WTI per barrel fell 4.3% to 75.57, while Brent dipped 1.3% to 82.31. Both types of crude oil are down over 38% from their highs set in March of last year. And the average price of regular gas fell by a dime to $3.45 per gallon at the end of February. When you look at crypto, all right, following a 2022 where the prices of both Bitcoin and Ethereum plummeted by 2/3, Bitcoin is already up 41.3% and Ethereum has risen 36% so far in 2023. Though the price of Bitcoin increased just 3% in February and Ethereum by 4.2%, could the worst be over for crypto? And, I do actually cover a lot of crypto videos. I know a lot of people are here on the channel for pretty specific reasons. They're either here for some commodity videos like natural gas or the gold and silver videos, or they're here for, TLT updates or things like that, or they're here for crypto. But, I'm one of the only people out there, one of the only channels out there actually giving some good charts, some good data for everything, whether it's individual stock equities, whether it's commodities, whether it's cryptos, whether it's the bond market, TLT. It's gonna, be hard to find somebody else who's actually going to be able to cover this info and give you guys some actually good stuff in an unbiased way. Moving on, we have production and sales logging in a slight increase of 0.3 points. The U.S. ISM manufacturing PMI put an end to 8 consecutive monthly declines. That was a big deal as well. At 47.7, however, the manufacturing PMI continues to indicate the manufacturing economy is shrinking. On the other hand, U.S. retail and food service sales logged its highest monthly increase since March of 2021, jumping 3%. The U.S. retail trade inventory sales ratio inched closer to its 30-year average of 150, rising 2/100ths to 1.26 as of December 2022. Housing month over month, U.S. new single family home sales surged 7.2% in January, matching December's revised value exactly. Existing housing data continues to trend in the opposite direction as U.S. existing home sales month over month decline of 0.7% in January marked 12 consecutive monthly declines for existing home sales. The median sales price of existing homes cooled off for a 7th straight month, falling 2% to $359,000. In further unwelcome news for potential homebuyers, 15-year and 30-year mortgage rates went back on the rise in February to 5.76 and 6.5% respectively. Now, hopefully you enjoyed this video. This was more of a monthly roundup and kind of just a monthly recap of everything that happened in February. Okay. I didn't go over some of the normal charts that I do, but I'm also just trying to change things up a little bit. So let me know, I can start doing these videos monthly and give you guys a nice monthly recap of, what's happening in the market, whether it's, from inflation, whether it's the employment numbers, we have the bond market. We went over the stock market a little bit, even touched on housing and crypto. If you guys enjoy these type of monthly recaps, let me know in the comments below. I'll be happy to do some more. And most likely I'm going to drop another TLT video this weekend, going over some of the normal charts that I look at, core sticky inflation. We're going to give a detailed technical analysis of TLT. We're also going to take a look at a few other things. We're going to take a look at SHY. And also, if we take a look at a lot of the Treasury yields, there's some bearish divergence on the weekly charts. So I'm also going to cover that. And those bearish divergences combined with that abandoned baby pattern that we had on TLT, if those end up playing out and continuing, to give confirmation, we could end up seeing a nice little rally here in the bond market. It all just depends, but I'll make sure to show you guys the charts so that way you guys are prepared and know what to look for, whether it's upside or downside potential. Smash that like button, subscribe to the channel if you guys are new, and I'm out.